All right, guys, I think we're ready to get going here. Just give me just a few more seconds and we'll start it up. We'll get it going for the day. Having an issue with my software. It keeps stalling out on me and shutting down. So I think we're just going to have to get started here. So give me just one moment and I'll queue up our intro video and we'll get our pre-market going. And I'll put one more message in just so we can get anyone who's forgotten. Alrighty. Alrighty, good morning everybody. Welcome. We are going to start our pre-market analysis on the S&P 500 futures market. This is our second time doing this live for the Day Trade Like a Pro community and also sending it out to our YouTube viewers. So hope everyone is having a good morning. We are coming into the last probably week has been an interesting kind of situation, just to put it in those kind of terms. So if we could just jump up to our 4 hour here, just so we get kind of a larger view of what's going on. For literally, I want to say over a week now, we've had this situation where we come up and we get a lot of bearish indications off the highs. All right, so if you look down to the bottom of the screen here, you can see we have this RVI. Every time we push to a new higher high, to new all-time highs, we're getting exhaustion patterns on our higher time frames. However, we get continuation patterns off the lows, and the continuation patterns are what follow through for continued pushes. So for, let's see, 1, 2, 3, 4, 5, 6, 7, for 8 days now, we've come into the market and had the exact same picture. So if you guys were here a week ago for last Thursday's session, which is going to sound very similar to this morning, as opposed to something like back here on October 1st or over here on October 12th, where we had a very strong bullish argument in the market. And as you can see from October 12th or October 1st back here, we basically never came back to test the lows and went ahead and went through for this, what I think is now a 300, almost 400 point push if we can get another 60, 70 points here. And then on the morning of the 12th, again, we came into the market, had a very clear picture, very bullish looking, and then from there we got this 250 point push. This morning and for the last few mornings, the picture has been very mixed. So I'm just warning you guys, might not be the most beautiful confluence of everything this morning. Let's go up to our ultra high time frames, and if you remember back to last week, when we were here, we talked about these large wicks to the downside, just looking at things from a candlestick perspective, right? And you can see going into the past, a lot of huge wicks to the downside end up leading to just continuations to the upside, right? So right now, this current quarterly bar, which will close at the end of November, has a huge wick to the downside, and now we're even getting a nice body to the candle to the upside. So this is a bullish omen, at least looking at this from a quarterly perspective. And keep in mind, there's no signs of exhaustion if we look to our RVI divergence. When we get to our monthly here, and this is something that we kind of hinted at last week. First of all, the previous candle here, this red candle you see, when this started forming at the beginning of September, you see we opened right around this 45, I don't know if it was 12, 18, somewhere right around there. We already had a little bit of a bearish argument that we talked about in our, with our members in our pre-market analysis back at the beginning of September. And sure enough, all throughout September, we got this sell-off. So we don't want to ignore what we're seeing on the current monthly candle and that is kind of a continuation of this pattern. So you can see that we have pushed to new highs on this current monthly bar. The RVI is actually pushing to an even lower low, or a lower high, I guess you could say. So there is a little bit of and I said this yesterday in our recap when I put it out in the room, a little bit of some inklings of bearishness right now, and we're going to see it on some of these high time frames. So it's kind of a situation where we have mixed signals on our high time frames and then mixed signals on our intermediate time frames. So not the greatest picture, but one thing that I can say up here from this monthly perspective is we have a very strong bullish engulfing bar right here. So typically when you have a new bar that engulfs, so it covers the entire range of the previous bar and breaks to the upside, that's considered a bullish engulfing bar, and it also is a bullish omen in the market. So if you look back, here's a pretty good example. You have this bar here. Next bar forms. We retrace the entire leg itself, the entire previous candle, and go ahead and break to the upside. So we're seeing that right now. So again, bullish omen as far as candlesticks, a little bit of a bearish take on it when you look at the RVI. So like I said, it's starting to get even more mixed. Yesterday, because of some of these mixed signals we're going to go through, we did not have any confidence in pushing to a new all-time high. If you go back to the day before that, and for the last week and a half, or whatever it was, 8 days, we did have confidence that we would push to new all-time highs. And if we go down to this 4-hour chart, back here when it first formed, back here on October 19th, we expected a new high. On the what is this, the 19th, going into the 20th, we expected a new all-time high. And pretty much every day, even though we had some mixed signals, we expected new all-time highs. But as of yesterday, when we started to get some of these other signs, we started to expect that maybe we wouldn't make new all-time highs. And sure enough, yesterday we got the sell-off. In fact, if we look over to yesterday, we pushed up to 50% of the previous day's price action. And then, so right here, there's the high from the day before that. There's the low from the day before that. We came up and we tested 50% of the previous day 3 times yesterday, and then went ahead and sold off. So this morning, I think we're probably in a similar situation. So let's go ahead. I digressed a little bit there. Let's go back to our monthly chart really quickly. So again, that bullish engulfing bar looking nice. A little bit of exhaustion going on the monthly. Keep in mind this bar is going to close tomorrow afternoon. So when this closes tomorrow afternoon, we're going to have to come back here and see where this RVI is sitting. What I would like to see is an actual turn up, and it closes looking like that. However, it could continue to build up like this, so we'll have to see. Let's go ahead and jump down and take a look at what the weekly is saying. And the weekly also, and this is what we were talking about for a day or two now, is the fact that we have this bearish situation. And if you look back, and I thought I prepared, or at least wanted to bring up a previous time where we had a similar situation. I'm trying to find it now. So right over here, if we could just go back and look at what happened right here in the market. Is it here? I'm trying to... I had this prepared, so I can't find it right now. Apologize about that. But essentially what we have going on, and I think this is actually it right here. So when we started pushing back over here in the market, notice how we got a bearish divergence right there. There was a little bit of follow through, right? Because the candle opened here at 92, 39.23, and did eventually sell down into 38.50 there on that bar. However, the point I'm trying to make here is we got the bearish divergence, and then price started to continue advancing back up. However, RVI was much lower than the peak back here, right? So there was an argument on this bar that there was some bearishness, and then as it continued, even more. If you look at what we're doing right now, there's an argument for bearishness as this continues to push higher here. So we're going to have that until this RVI actually comes up to 81. And so that's going to kind of be on our radar here. And what we want to see, and what makes the high time frames very hard to kind of hang our hats on, is it's going to take time. If this ends up closing and we get an actual peak or an apex, then we actually have something to compare, because I like to look at actual peaks in the RVI rather than just straight lines. So we need to have this peak here in order to make the strong argument for bearishness. And so as this continues to develop, it's going to be, hard to actually pinpoint where the top is until we actually start to see that turn and that apex on RVI. So for now, there is the argument for bearishness on the weekly as well, but remember, we have to wait for the actual turn to actually have something to compare. So for now, it's up in the air with some inklings of bearishness off the highs we made on the weekly. And then finally, we get to our daily, the bottom end of our high time frames here. And the daily really did not have any signs of bearishness. So daily looks very strong ever since we, again, bounced back on October 1st and October 12th. Again, we called this on October 12th and got this push. And right now, what I noticed yesterday is this very bearish bar up top here. So notice how we have a huge wick to the upside, came all the way down, closed almost at the lows of that bar. That was one of the reasons we were starting to get a little bit skeptical that we were going to have a push to a new all-time high yesterday. And sure enough, you can see there's the push up to 50% of that previous daily bar, and then the failure down and close at the lows there. So that's on the chart. That is a bearish signal or clue. However, it looks like we might even be recovering by this point. And that's what makes this difficult, is the fact that we are going to get bearish signals in a strong bullish push. But if the bulls are going to be strong, they're going to end up recovering after a very shallow pullback to continue going. In fact, if we go back to this weekly, remember, you get the bearish signals in bullish pushes. So if we zoom out here and we look, there's that COVID correction back from 2020. And a nice bearish divergence right before it happened. So in essence, going into that sell-off, actually this is the sell-off from February of 2021. Do I have this date right? Yeah, it's the COVID correction. When that happened, we already had a bearish signal in the market. So we almost expected there to be some type of correction. And sure enough, there was the correction. Anyway, I've been diverging off of my main topic here, which is the fact that as we push in these bullish moves, we get bearish exhaustion. So you can see a bearish signal there, bearish there, bearish there, bearish there. And there is a very slight correction in the market, but then you get these bullish continuation patterns off lows, and the bulls jump right back in and continue to push. So we're going to see that kind of stuff. Let's go down to the 4-hour, and we kind of talked about this when we started the pre-market. The fact that this 4-hour chart gives us bearish signals off highs. In fact, we got it back here, we got it up here, we got it right there, using the wrong button. Right there, let me cover those up, and right there, and even arguably right up at the tops. So you can see we've got all the bearish arguments when we push every single day, but then off the lows, we actually have a lot of bullish continuation patterns that end up following through for the continuation higher. So this morning, coming into the market, we've got the same situation again like the last 8 days. We have a bearish argument from all the previous highs that we see here in the market, and then we have bullish arguments from the lows that we're making right now. So we're stuck in kind of an area where we have to see who wins out. Now, if we just go to the past, typically the bulls do win out on these bullish continuation patterns off the lows, and they continue. But we don't want to ignore the fact that we did get that bearish signal on the daily bar from the day before yesterday in congruence with the 4-hour. So maybe if there's some type of weakness, we'll get that correction. However, right now we have the bullish continuation off the lows. Let's go over to the 60-minute, and the 60-minute just essentially agrees with what we saw on the 4-hour, so I don't really need to spend any more time on this time frame here. So nice bullish off the lows from yesterday, bearish off the highs from yesterday, and some bullish continuation patterns off the lows from Globex here. If we go down to our 30-minute and our 10-minute, our intermediate time frames, give me one moment, I don't know. There we go. Our 30-minute also had that nice bullish divergence off the previous daily low, bearish signals off the previous daily highs, and then the continuation patterns we're getting off lows right now. So unfortunately, and I told you guys this last week, it just is what it is. We're coming into the market and we're in this kind of inching higher, and it's what we're dealing with right now. We don't have a nice confluence of signals where, you know, when we do this every week on Thursdays, there is going to be a Thursday morning where we come in and there is a daily, a 4-hour, a 60-minute, and a 30-minute signal, and then on the other side, maybe only 1 or 2 signals. And typically when that happens, that's when we get the follow through and we have confidence in that one signal where everything is lining up. This morning, and just like last Thursday, we just don't have that situation. So coming into this morning, we are expecting that if we can hold the previous daily low here around 45.44, let me bring up the 10-minute because we get a little bit more resolution. If we can hold around that 45.44 area, right where we had all the bullish arguments from yesterday's low, we can expect a push up to break the previous daily high and then come up to test the highs from yesterday. So we've got kind of a line in the sand here off the previous daily low. And then if you look at this 59.50 here, this is 50% of the previous day. If we go back to yesterday, again, I mentioned this earlier, 50% of the previous day was sitting right here at 75.25. And notice what happened in the market. We came up to 75.25 once, came up twice, came up 3 times, and failed, and even got bearish signals off some of these tests of 50% of the previous day. So this morning, it's going to be important for us to get through that level. If they can't get through that level, then we're, you know, that's just going to sow some more cases for the bears this morning. On the other side of things, if we do end up selling off when we can't get through 50% or from the previous daily high, and we break the low from yesterday, we have some really good areas of support to look for potential bounces. And then and that's what I would expect in this kind of market. Remember, we don't have full bearish alignment off the high time frames. There's arguments, and every other time frame seems to give a different kind of indication. So we don't have a full alignment of bearishness off highs. So I still expect that the market is going to attempt to push higher overall. I'm not saying this morning. So that's why I would expect there to be some type of bounce if they do end up breaking the previous daily low at some of these key levels we have below us. Keep in mind that the prediction points right now are lining up beautifully with previous price action. I think that the most relevant levels for potential support are going to be our prediction points this morning. And keep in mind, anything can happen in the market. We might have a certain bias. In fact, this morning we don't really have a bias one way or the other because of the situation. But some mornings we do have a bias. And if that doesn't work, remember, the market is, even though you might have a case for what you would expect the market to do, if it doesn't do that, you need to adapt to what the market is doing and go ahead and switch sides, flip the hat, and start looking for trades in the direction of what the market is telling you. Because every moment, every new tick in the market means that there's new information, and that new information could mean we're now in a different scenario. So this morning, again, I would like to come in and tell you guys everything's aligning for a bullish push, or everything's aligning for a pullback. This morning, again, we don't have it, and it's just because of the situation we're in. So we've got our guidelines here this morning. If we hold above that previous daily low and we can get through 50% of the previous day, much more likely that we're going to go up and test that 50% of this level here at 45.75, and then the all-time high is right there. And also notice from a prediction point perspective, if we can get through, essentially that's right around 50% of the previous day, right around 61.8 of the previous day is the KP there. If we can get through those two levels, the next prediction point isn't until essentially the all-time high. So typically what we see with prediction points is the market will travel from CP to CP. You can see here back on October 25th, this bounce off this CP here pushing to this one and then coming down, and essentially we're holding the KP right now. So holding above this KP and then getting through these two would spell a push up into the first CP up here and the all-time high. Whatever happens from there, again, we don't know what's going to happen. We're going to have to react to whatever the market is telling us. If they then end up getting through those two prediction points, then yes, it opens up plenty more to the upside. And if we can't get through the all-time high, all the bearish signals that we did get from that point, including the very bearish looking daily candlestick, then that might mean we're going to get some type of double top situation and a correction from there. So we'll see what happens this morning. There's this huge push, so it's really hard to call good retracement levels just because of the fact that you could pretty much draw a retracement here from every single low, and I think in most ways it would be valid. Now we could just look at the weekly retracement. So if we go back to October 24th and we look at the whole week that we've been in right now, and we can look and see that we are finding support right around the 61.8, and then look where the market bounced yesterday, right off all this previous resistance in the market. So we have a lot of kind of structure building up, kind of like a resistance line somewhere generally right around there. And sure enough, when we sold off from all-time highs, we came down, found support off of all this previous resistance, and then retested it here, and now we're back up. So I hope that helps you orient yourself this morning. We have kind of some conditions for what we want to see. Ideally for the bulls, they'll get through 59, get through the previous daily high, and that opens up higher. If that doesn't happen, we're looking for longs off pullbacks. However, it might be a deeper pullback to somewhere around 29 or 10 or something like that. So I will leave it at that, and we're going to jump over to our members area and start looking for some trades this morning coming into the open. Keep in mind, if it is somewhat sideways and slow, not really worth putting a lot of risk on. Yesterday, I was guilty of putting probably 3 or 4 trades on that just got wiped out because of all the sideways action. So if you go back to yesterday, it was just a whip down, so it felt bearish. Then it was a whip back up, so it felt somewhat bullish. Then a whip back down, and then pretty sideways. So it was a difficult market unless you understood that we were in a range and you sold the tops and bought the bottoms. I think that's all I have for you guys this morning. Again, I hope that we come in one of these mornings and it happens to be like October 1st or October 12th, and we get you guys a really good bias going in that could end up following through for a week or two of a specific direction. So have a great rest of your day, guys. If you're interested in joining us in the members section, we do this analysis every morning. We also trade for an hour and a half, and we have a weekly study session, which actually is today. So for the members that are here, we have our study session at 9 a.m. Pacific. Have a lot of really good things to go through this week. And so if you're interested in joining us, just send me a message and we can get you set up. I do use a proprietary kind of trading system for the futures market, looking at the divergences to help build a bias, and then also to help for entries into trades. So just as an example here, this pullback to this KP right here also had a pretty nice bullish divergence on this 1-minute chart. And so this is kind of the things we're looking for to come into alignment for a trade. So if we have a nice bullish divergence, in fact, we also have it over here on the 512 chart, and it's right off a level that we're interested in, that is our signal to go ahead and try the trade. And so sometimes it works out really nicely. In this instance, I think that was a pretty decent short time frame indication of a bounce. And sure enough, we did get a bounce right up to test the 50% there. So these are the kind of things we're doing, looking for specific levels in the market that we're interested in trading, and then waiting for signals to line up there to take the trade. So have a great rest of your day, guys, and we'll see you back here next Thursday for our pre-market analysis. Bye-bye.